Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's keep up with the gold analysis. So market right now is consolidating around the 1935 area. So as we said yesterday, it's better to wait for some pullback. It's just because, well, just normal solution is to buy the dip if you would like to take the position on the long side of the market. And you can see that the pullback now is gradually starting. In general, in the gold market, it's a very tricky situation. And if you'll take a look just at the 10-year yield in the United States, you'll see what I'm talking about. This rally is absolutely unbelievable in terms that, well, it actually has happened on the background of the rising real rates in the United States. That's already around 2%. And on the background of the rising of the nominal rates, that's already around 4.38. It's the level hasn't seen since the 2007. Another tricky moment is that if you'll take a look at the 10-year yield, you could see what's going on. Market shows upward action. So despite that, mostly it's anticipated that it should be dovish comment from the Fed, is that the rate will not be raised. You can see how 10-year yield behaves, so better to show you on the daily chart. Despite any spikes, wash and rinses, any spikes and wash and rinse and everything of this sort, you can see that the market is returning right back up. So it is not dropping out of the top and calling around it. It indirectly hints that it might be some surprise on the Fed meeting today. So, and actually we have other reasons to suggest that. Already we talked about this yesterday, just about the rising of the fuel across the globe. That's definitely the inflationary factor, and Fed could try to, maybe, I don't know of course, but maybe it could try to act in advance, hiking rate today, for example, because in August it will be the pause. But this is just my suggestion. Maybe the probability of this is not very high, but I'm not totally exclude this thing. And as you can see, performance of the 10-year yield also tells that some surprise probably will happen. Maybe the rhetoric will change significantly into the hawkish, and if even rate will not be changed. So it's definitely something should happen here. And this is relatively, it's obviously bearish factor for the gold. But on the gold market, take a look. We do not see any reaction. So actually market is going higher. And probably in the rest of the few sessions, we will get the answer, whether it's some technical reaction, gold reaction on some factors, such as we talked about, if you remember, after maker's strike, or maybe is there canceling of the limitations on the old export from the China that actually has well, make the prices across the globe and the different exchanges more balanced. Maybe this is the reason. And if this is these factors that I have just mentioned, then probably reaction should be short term and market should return back in the normal behavior under the impact of the normal market factors as the interest rates. But if gold market remains in this area and keep going higher, it means that something is going on, that this is not the temporal reaction on some technical factors, but this is really some big fundamental shifts, maybe in the minds of the investors as well. So that really starts significant demand for gold. We will see. Meantime, on the shorter term, on the forward time frame chart, as we said, retracement should start, and market has formed nicely looking evening star pattern on the top, showing some pullback. We have agreed to watch at least around to the 30% support, around 1923. Potentially, if we'll take a look at the hourly chart, it might be the hand and shoulders. So as you could see on the euro currency, this is a short hand and shoulders. Here is also might be the hand and shoulders, or correspondingly it failed. And appearing on the hand shoulders easily clarify whether it's technical rally or not. If we will get hand shoulders, market starts dropping, it's definitely technical factors. If not, if market will keep standing around this area and start upward continuation, well, this means something really significant on the gold market, and we will see. So what to do currently? Currently, guys, we do not have the background for taking the short position. We do not have the pattern in place. overall background stands bullish, and from that standpoint, there's no reasons to consider taking the short position. The only exception, if you would like to make the bet on a hawkish Fed decision. If you think that this will happen, you could try to take this risk and trying to take the position somewhere with the stops above this area, probably without waiting the appearing of the Henry shorts or any other confirmation. This will be just pure bet on the Fed. Because technically you do not have any reasons to take the short position. From speaking about the long position, yes, overall context stands bullish, but as we said, we prefer to wait for a pullback to take the position. And since this was the bullish reversal swing, these actually comments that we have made yesterday remains the same. We would like to get the pullback at least back to the, let's call it as a neckline, but in fact this is the 44% support, 30% support, and 1923. And here we could make the decision on the possible taking the long position. Everything mostly stands the same. Once again, only if you would like to bet on the Fed and you believe that will be dovish, you could try to take the position right there and hoping that market will just keep going to the upside. So keep it simple in 2 words. If you would like to make the decision on the technical factors, then you have to wait either retracement to the 1923 if you'd like to buy, or wait the clear bearish pattern if you would like to sell. If you would like to bet on the Fed, correspondingly you make the decision right now, taking the corresponding position. That's all.